All right, today we are going to start with our second topic for this course, which is titled Variance Analysis. Of course, this topic is going to be divided into two chapters, chapter number 7 and chapter number 8. So we are going to discuss this topic by going through two chapters, chapter number 7 and chapter number 8. Of course, we will start with chapter number 7, flexible budgets, direct cost variances, and management control. But before entering into this topic or discussing this topic, we need to understand a tool, a very important tool, in order to understand this topic, in order to understand what do you mean by variance analysis. Of course, you might heard the term budget or budgeting process. Of course, this is a tool that needs to be done, or this is a tool that needs to be implemented in order to have something called variance analysis. So, first of all, what do you think the meaning of a budget? Of course, we heard the term budget in the news lately, for instance, when the US had this budget deficit. And also we heard it in the local news when the Palestinian Authority was not able to pay the salaries of their employees and so on. And on a personal level, we might hear some of individuals say, I do not have the budget to purchase this or that. So what do you think budget means? It is a tool or a plan that presents the expected performance. Excellent. This is a part. Excellent. But what is the difference between this budget and a plan? As you took in Business 1, what do you mean by a plan? First of all, a plan is setting an objective, setting a goal, and then setting the implementation or how we are going to achieve this goal. This is a plan. So what is the difference between a plan and the budget according to your definition? There is no difference. So we need now to see what do we mean exactly by a budget. You have it partially correct. That a budget is a plan of an expected performance. But
numbers or information that is used to get out with a number or something to walk through or to.
Excellent. Therefore, a budget needs to have a quantitative part.
Yes.
Excellent. Therefore, a budget is a quantitative expression. A budget is a quantitative expression. Expression of what? Of a plan. Therefore, we need to have, in order to have a budget, we need to have a plan. And the quantitative expression of that plan, transferring the plan from words onto numbers or into numbers, is the budgeting process. Therefore, the budget is the quantitative, as we can see here, is the quantitative expression of a proposed plan of action by management for a specified period. Therefore, these are the three functions, or let us say 3 factors within any budget. It is a quantitative expression of a proposed plan within or for a specific period or a specified period. This is a budget. Therefore, In order to have a budget, we need to have a plan. In order to have a plan, we need to set the objectives and the goals of the organization or any program, and set the ways to achieve these objectives and goals. After doing that, we have a plan. After transforming this plan from words into numbers, we have, or we would have, a budget. Therefore, as we can see, the budget also needs to be for a specific period. You cannot say that, let us, like a plan actually. A plan also needs to be for a specific period. We cannot say that this plan is forever or for infinity. No, we need to specify the time for this plan, and therefore the expression of, or the quantitative expression of this plan also would be for a specific period of time. For instance, if one of the organizations came up with the plan, of course a plan in order, or for the objective or for the goal, in order to increase their market share. And they said, in order to increase our market share, we need to increase, for instance, our quality. Therefore, in order to increase our quality, this is the main goal. This is the main goal. The main objective is to increase our market share. How we are going to increase our market share, what we are going to do in order to increase our market share, we are going to increase our quality. How we are going to increase our quality? We need to increase our efficiency, for instance. We need to increase the quality of the raw materials. We need to increase the quality of the employees or the workers that perform the manufacturing process itself. The skills of the employees, excellent. We need to increase the efficiency of our processes, or we need to increase the quality of our processes. We need to increase the quality of our customer service. Therefore, we did set an objective of increasing our market share by using a strategy which is increasing our quality, and then we came up or determined the processes that needs to be, let us say, that needs to be developed, that needs to be improved in order to increase our market share. This is a plan. Is this a budget?
No.
Not yet a budget. It is only a plan. Now, if we answer the following questions, we will transform this plan into a budget. If we would say, what will it cost for us if we need to increase our the quality of our raw materials? Therefore, what is the cost of the new raw materials? What is the cost of developing the skills of our employees? What is the costs of performing a developed or performing an improvement in our customer service department, and so on. Therefore, as you can see, these questions are all related in terms of money. They are all related to dollar terms or the terms of money. Therefore, if we answered these questions, if we transformed the action plan into numbers, we would have something called a budget. Any questions? So, what do you think is the processes, or what do you think is the processes within the budgeting process? What are the procedures that needs to be done in order to prepare a budget? Of course, any budgeting process consists of 4 phases. Any budgeting process. If we are talking about for-profit organizations, which are businesses, if we are talking about not-for-profit organizations like governments, for instance, and so on, or service organizations, or manufacturing organizations, or merchandising organizations, and so on, they all have the same budgeting process. Of course, what do you mean by a budgeting process? Is the process or the procedures that needs to be done in order to transform a plan onto a budget. This is the budgeting process. So what are the different phases of any budgeting process or a budget cycle, as many would call it? First of all, number one, managers and accountants plan the performance of the company, taking into account past performance and anticipated future changes. Therefore, what is the segment that is mainly involved in the budgeting process? As we can see here, managers and accountants. They do what exactly? They plan the performance of the company. According to what? Managers, they come up with the plan. Didn't you study in accounting, or sorry, in Business 1 and Business 2, in the Principles of Management 1 and Principles of Management 2, that any manager performs more than one function: planning, controlling, motivating, directing, and so on. Therefore, one of these functions or one of the job descriptions of any manager is coming up with the plans. Therefore, managers would come up with the plan, would come up with the expected performance of the company for a coming period. Of course, always when we say budget, we are talking about the future, we are not talking about the past. The past is excellent, is according to, or it is presented in our financial statements, whether the balance sheet, whether the income statement, whether the changes in the shareholders' equity statement, or the cash flow statement. These financial statements present what has happened in the past. But when we are talking about the budget, we are talking about the future, we are talking about expected performance, we are talking about expected costs, we are talking about expected revenues, and so on. Therefore, managers and accountants would come up, first of all, with the budget. Of course, they do not come up with the budget by themselves. We need to make all the organization participate in this budgeting process. That means we should not let the senior managers by themselves perform the plan, or not perform, but come up with the plan. We need to make the employees, or all employees within the organization, all the managers within the organization, all the departments within the organization participate in this budgeting process. Why? Why don't we say to the senior managers or the top managers, come up with the plan, and we are going, as employees, we are going to perform this plan. And by, of course, conveying or communicating these or these plans or these objectives onto the employees, and that's it.
Maybe that makes employees encourage or improve their efforts to make the budget
Excellent, excellent.
Because to come up with a good plan, everybody must share his point of view. That might be changed from one to other.
Excellent.
And they will feel that they are responsible for their opinions, and
excellent.
And they will be active.
Excellent. Therefore, if all managers within the organization, all departments within the organization were part in this budgeting process, therefore each and every manager, each and every employee participated in this process would try their best to make this budget or to make this plan work. But if they did not participate, if the senior management just said these are, let us say, the objectives, these are the action plan, or this is the action plan, these are the procedures that you need to implement, then the employees and the lower management, they will not have the same sense of responsibility in order to make this plan work, because they did not come with this plan, because they were not part of making this plan. They were not part in making this budget. Therefore, if this budget fails, it is not their fault. It would be the fault of the senior managers, and only the senior managers, because you came up with the plan. You are responsible for this plan, not us. But if the budgeting process or the planning process took into consideration the participation of all employees, therefore all employees will feel that this plan is their plan. Therefore, if they want to make it work, they will, let us say, try their best to make it work, because this is their plan. They came up with this plan, therefore they will focus upon making this plan work. Therefore, we need the participation not only from, of course, managers and accountants, but all the departments within the organization. Of course, in implementing or making up the plan or making up the budget, we need to take into account the past performance and, of course, any anticipated future changes. Because as we said, the budget is considered with the future, it is not considered with the past. So why here do we need to consider the past performance? We just said that the budget is related to the future. Why do we need to consider the past performance in order to perform or in order to come up with a budget?
Maybe the managers and the accountants need to study the financial situation of the company in the last years or periods to make it to make this budget. عشان نشوف إذا كان الميزانية هل the past budgets work well or not.
Excellent. Therefore, in order to anticipate the future, we need to study the past. In order to come up with future events or future, let us say, costs or future revenues, we need to understand the past and build up from the past. And as you might know, that any forecasting is based upon past information. Therefore, we will only use this past performance or past information in order to help us to predict the future, to anticipate the future numbers. And of course, not only the past, we need also to consider what might happen in the future. What are the changes that might occur in the future, as well as we need to consider the analysis of our past information in order to predict the future. This is the first phase of any budgeting cycle, the preparation of the budget. Number two, now, we need for the senior managers to distribute a set of goals against which actual results will be compared. Therefore, number two, or step number two, or phase number two, is the communication of this budget. Because of course, after each department would perform the budget, or let us say, come up with the budget, these budgets of each department would be communicated back to the senior management. The senior management would then add up all these different budgets of different departments within the organization into one main budget for the whole organization. Of course, after doing that in phase number one, the preparation phase, therefore comes phase number two, which is the communication of this budget from the senior managers to lower managers, to the managers of the different departments within the organization. Of course, as we can see here, why do we need to do this? First of all, in order for each manager or each department to know what exactly are the goals that we need to perform within the next period. What are the objectives? What are the plans? What are the procedures that needs to be done in order to achieve the goals that were set by the managers, were set by the organization within the next period? Therefore, after this communication, each department would know what are the goals. And then they would know that their performance evaluation would be according to these goals. Because as we might all know, that each manager of any department within any organization needs to be directed, needs to be motivated. Therefore, we need to have, or we need to communicate the goals in order for these managers to know how are they going to be evaluated. Therefore, the phase number 2 is the communication in order to know what are the goals by which they were or by which they are going to be evaluated. Of course, how we are going to evaluate the performance of these departments or the managers by comparison. Only comparing what was expected and what is actual. By this we can evaluate the performance of any manager. The third phase is now accountants help managers investigate deviations from the budget. Of course, corrective act after determining and investigating the deviations, we need to have corrective action in order to correct the mistakes of these deviations. Which is the feedback. Excellent. Therefore, step number 3 is one of the most important steps or phases in any budget cycle. Imagine that we came up with this excellent plan, and we came up with excellent procedures in order to perform this plan, in order to achieve our objectives. We also came up with the numbers that goes along with this plan, therefore the budget. And then after this exhausting process, after this highly, let us say, or highly procedure, or the procedures of the budgeting process that took a lot of time, that took a lot of effort in preparing, we just put this budget or this plan into the drawer and forgot about it. Therefore, what is the main objective now, or what is the benefit of this plan? Yes, we came up with the plan. Yes, we came up with the budget, which was an excellent one, but then we did not follow up with this budget. Like, for instance, on a personal level, how many of you said that in order to get an A, for instance, in some of the courses, I need to make a plan. I need to make a study plan. For instance, I need to prepare 1 hour before the lecture. I need to study 2 hours after the lecture. And before the exams, I need to study, for instance, before the exam by 1 month or by 1 week, and so on. And then this excellent plan was put in the drawer and never looked on it again. Therefore, what is the benefit exactly of this plan? Do we benefit from this plan? Yes, I came up with the plan, an excellent plan. If implemented, it would most definitely would give me or the opportunity to have an A. But after, let us say, performing this plan or coming up with this plan, there were no implementation. There were no, let us say, evaluation on this plan. We did not evaluate our implementation of this plan. Therefore, this plan would be forgotten. And it would not benefit at all the person who made up this plan. The same thing here with the budget. If we prepare a budget, an excellent budget according to an excellent plan, and then we did not follow through with this budget, it would not have any benefit on the organization. Therefore, we need to have this phase, which is investigating the deviations, which is following up with the plan, which is the evaluation of performance that was just said in phase number 2. And of course, after investigating the deviations, after determining the deviations, we need to have corrective actions in order to correct any mistakes that were done by implementing this budget. Now let us go to phase number 4, which is the last phase of any budget cycle. Now, as we can see, phase number 4 would define what do you mean by a budget cycle. As we can see here, managers and accountants assess market feedback. They take the feedback from the market after implementing the plan. They take into consideration also the changed conditions, because they did a budget for this year in the previous year, and now they need to perform in this year a budget for the coming year. Therefore, they need to consider, after implementing this plan, after implementing this budget, what is the market feedback? Do we have any changed conditions, or are the conditions the same as the previous year? And their own experiences according to what? According to the implementation of the plan. Maybe we had a problem in the plan. Maybe we had a problem in the budget itself. Therefore, we need to consider our experiences after implementing the plan that was done or was performed in the previous year, as plans are laid for the next budget period. Next budget period. Therefore, the term ongoing budget process, which a lot of individuals might call it, or a lot of books might call it, a budget cycle. Why do we call it a cycle? Because it is a loop, a continuous budgeting process, or an ongoing budget process. It does not end. We perform, or let us say, come up with a budget, and then we implement the budget. We let us say, evaluate the performance, and then we prepare the budget for the next year. And then we implement the budget, and then we evaluate the performance, and then we come up with the budget for the next year, and so on. Therefore, this is a budget cycle that never stops. Any questions? Of course, I want you to remember this phase number 3, because this phase is all about variance analysis. Our topic, variance analysis, comes here within this phase, which is investigating deviations from the budget. Now, any questions?
Maybe a good point that if we have a budgeting plan, and we didn't go through, and then we have a success, we don't credit that budget for this success.
If we performed a plan or came up with a plan, and we did not implement that plan.
Yes, and then we by
coincidence.
Yeah, we made a success.
Of course, the credit does not go to this plan, because we did not implement this plan. We did not go through with this plan. We did not follow up with this plan. Therefore, of course, the credit does not go to this plan or to this budget. Excellent. Now, let us take the advantages of having a budget. What do you think the advantages of performing a budget? So, what do you think if we do not come with a budget? Is this, or would this be problematic to the organization or to any organization if we did not make a budget, or we did not make a plan for the future? It would be problematic. So what is the advantages of performing a budget or making a budget or having a budgeting process within an organization?
What's the clear procedures to make goals or planned work, achieving goal or objectives?
Excellent.
We wouldn't know how badly or good that we are performers, and if we are in the right track to reach our goals, or we are in the opposite direction.
Excellent.
of our goals.
Excellent. Excellent. What else?
Method managers and employees to work computer design.
Excellent. Therefore, some of the advantages of having a budget, first of all, is the coordination and communication. As we said, in the preparation phase of any budget, we need to make everyone participate within budgeting or within this budgeting process, correct? Therefore, this is an excellent way of communicating. This is an excellent way of coordination between the different departments. Because as we just said, that in a budgeting process, the senior managers would communicate their main goals, their main objectives onto the lower managers. Then the lower managers, according to these guides, according to these guidelines, according to these main objectives, would, let us say, determine their internal or departmental objectives that would eventually, if implemented or if achieved, would achieve these main goals or would achieve these main objectives of the senior managers or the senior management. Therefore, as we can see, this participation by each department would make a great way of communication, because senior managers are communicating their objectives onto lower managers, and lower managers are then communicating their departmental objectives to the senior management. Therefore, it is a great way of communication. Also, the senior management, after getting, for instance, the budget of the purchasing department, the budget of the manufacturing department, the budget of the customer service department, the budget of the accounting department, the budget of the marketing department, let us say, the different budgets of the different departments within the organization. Now, as senior management, it can coordinate the efforts of all these departments in order to achieve the main objectives and the main goals of the organization. Therefore, it is a great tool of coordination. It is a great tool of communication, of course, among the subunits or the different departments within the company. Now, the second advantage, as we just said, it motivates managers and, of course, other employees. If these managers or these low-level managers and low-level employees had a say in coming up with the budget, had a say in, let us say, coming up with the plan, therefore they are motivated to make this plan work. They are motivated to do their best in order to, let us say, achieve the objectives that they came up with. Therefore, it is a great tool to motivate managers and, of course, other employees. The third, which is one of the most important advantages of the use of any budget, is a way to judge performance. It is a way that could be used in order to evaluate performance, which, of course, comes again to the motivation of the employees and managers. Because if any manager or if any employee would not feel that he is evaluated constantly, he would not care. For instance, if the production manager is not evaluated, or he does not feel that he is evaluated, if he did a great job, there will be no bonuses, for instance. If he did a terrible job, there will be no repercussions, for instance. Therefore, this manager would not care about the efficiencies of the marketing, of the manufacturing department. If he had high efficiency or low efficiency, it would not matter to him. Therefore, we need to evaluate performance in order to motivate managers. Therefore, how we can judge the performance, how we can evaluate the performance. We just said that in order to evaluate the performance, we need, first of all, we need to communicate the objectives, we need to communicate the standards, we need to communicate the goals onto the subunits, onto the lower management, onto the departments, and then we need to evaluate the performance according to these standards. We need to evaluate the performance by actually comparing the actual results and the anticipated results, between the actual results and the budgeted results, between what really has happened and what should happen or what should have happened. This is the performance evaluation. And one excellent tool in order to evaluate the performance is something called variance analysis. Therefore, this tool of variance analysis could not be done. We could not have something called variance analysis unless we have something called a budget. According to a budget, we would have a variance analysis. Therefore, as you can see, we would not have a variance analysis if we do not have a budget. And we would not have a budget if we do not have a plan. Therefore, as you can see, it is a cycle. We need to set the objectives, we need to set the plan in order to set the budget, in order to have performance evaluation, or in order to have something called variance analysis. Therefore, of course, variance analysis is only a part of performance evaluation. We are not saying that performance evaluation is only the variance analysis. No, it is just a tool in performance evaluation. So, now let us start with our topic, variance analysis, by first of all trying to define what do we mean by a variance. So what do you think a variance is? Excellent. It is the comparison. The variance is the comparison or the difference between the actual and the expected. As we can see here, the difference between the actual and the expected. Between the actual and, as we just said, the budgeted. This is called a variance. Therefore, what do we mean by variance analysis? The variance analysis is first of all determining this variance, and after determining this variance, we need to interpret this variance. This is what we mean by the term variance analysis. Any questions? Of course, as we just said, variance analysis could be used in something called performance evaluation. We just said that and we covered that. Another thing that could be used, or let us say an advantage of using the variance analysis, is something called management by exception. It enables managers to manage the organization by exception. What do you mean by this term, management by exception? First of all, do you think that managers have a lot of free time? That they only just sit there in their offices drinking coffee? Of course, some of the managers are, but this is not the case in a competitive market. Therefore, do you think in a competitive market a manager just sits on his desk and do nothing? Therefore, time for any manager is a crucial factor, correct? Therefore, we need to make this manager concentrate on the things that needs to be concentrated on. Therefore, the manager need not to concentrate on all the aspects of the organization. Of course, he also could not concentrate on all the aspects or all the procedures within the organization or within his department. Therefore, we need to implement something called management by exception. If he does not have the time to concentrate on all the procedures, therefore, we need him to concentrate on the things or the procedures that needs to be concentrated on. Therefore, the management by exception is the practice of focusing attention on areas that needs to be concentrated on or focused upon. What are these areas that are not operating as expected? Therefore, any manager, in order to utilize his time efficiently, would only concentrate on the procedures, on the operating areas that are not functioning correctly, that are not functioning within the budget, that are not functioning as expected. For instance, let us say that we came up with the budget, and the budget says that the direct materials, for instance, is $60 per unit. And then, according to the actual, the direct materials costs were not $60, were $75. While as the direct labor is as expected. The variable manufacturing overhead is as expected. The fixed manufacturing overhead is as expected. Therefore, where is the problem? Do we need to concentrate on all of these costs? Do we need, as management, do we need to concentrate on the fixed and the variable manufacturing overhead? They are according to the budget. They are operating according to the budget, according to the plan. So why do we need to concentrate on these operations? We do not need to concentrate on these operations. For instance, the direct manufacturing labor also is according to the budget, according to the plan. Therefore, we need not to concentrate on or focus upon this area. But the problem lies within only the direct materials. Therefore, the manager, if he utilizes or uses management by exception, would only focus his attention upon this operating area, or would focus his attention upon the direct materials, and would ask of course, the purchasing manager, for instance, why do we have this variance? Why is the cost of direct materials higher than anticipated? Therefore, the only focus here would be upon the direct materials, not all the costs or the different costs within the organization. All right? Yes?
Management by exception is accused when the planning and the controlling doesn't appear the same.
I didn't get what you are saying.
Management by exception occurs when the planning and the controlling doesn't appear the same.
When planning and controlling doesn't, the actual, let us say, when we have a variance.
Yeah, the planning is the budgeted and the...
Excellent, excellent. Therefore, we are going to manage, we are going to focus upon only the areas that we have variances in. Of course, not all variances, as we are going to see in this chapter, inshallah. But for now, any variances or any variance analysis would enable managers to use or utilize the management by exception. Correct? Therefore, what do you mean by management by exception? If we have something called variance analysis, managers would only focus upon the areas that are not operating as expected. Therefore, they would focus upon areas that has variances. As the example was just said, the direct materials. And they would not focus upon the direct labor, for instance, would not focus upon the variable or the fixed manufacturing overhead, because they were operating according to the plan. They were operating according to the budget. But the problem or the variance were only within the direct materials. Therefore, the focus of the managers would be on or upon the direct materials, or the area that was not operating as budgeted or as expected. Any questions? Of course, there is an example of web company in your books. So the example is as follows. Consider web company, a firm that manufactures and sells jackets. The jackets require tailoring and many other hand operations. Web sells exclusively to distributors who in turn sell to independent clothing stores and retail chains. For simplicity, we assume that Web's only costs are in the manufacturing function. That means Web does not incur any marketing costs, does not incur any selling costs, does not incur any administrative costs. We also assume that all units manufactured in April 2011 are sold in April 2011. Of course, according to this assumption, we mean that we do not have beginning raw materials inventory, and we do not have ending raw materials inventory. We do not have beginning or ending work in process inventory, and we do not have any beginning or ending finished goods inventory. This is according, of course, this makes it a lot easier for us in our presentation. Of course, as we are going to see along the way, we are going to relax some of these assumptions and see how will it affect our results. Now, according to the example, they gave us that web company has 3 different types of variable manufacturing expenses. First of all, the direct material cost with the amount of $60, direct manufacturing labor cost with the amount of $16, and variable manufacturing overhead cost with the amount of $12. These are the variable expenses within, variable, of course, manufacturing expenses within web company. And then the example states here that the number of units manufactured is the cost driver for direct materials, direct manufacturing labor, and variable manufacturing overhead. Therefore, the cost driver for these costs are the units manufactured, or the number of units manufactured. The relevant range for the cost driver is from 0 to 12,000 jackets. This is the relevant range by which the relationship between the cost and the cost driver stands. If we are talking about any number that is not within the relevant range, therefore our definition to the variable expenses, or our relationship with the relationship between the cost driver and the cost itself would change, or would not stand as it is. Of course, by this, we are going to continue, inshallah, the next time. By this, we have finished for today. Thank you for listening.